The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a fairly quiet day in the grain and oilseed trade on Tuesday. Soybeans ended up pushing a little bit mixed into the red after some early strength. Livestock trade, we see cattle futures finding some green there again on the day Tuesday, even amid all the talk about the administration's plans to lower beef prices and more. Gold, look out below. A lot of volatility and a bit of a pullback crash there on Tuesday. We got a lot to talk about. Let's dive in and look at some of the technicals and more in these markets. Joining us for a conversation, always good to hear from Brian Splitt with agmarket.net. Brian, how are you, sir? Good to have you back on the show.
Hey, pretty good for a Tuesday, I think, Jesse. Thanks for having me again. Always good to be here.
You bet. You joked with me before we went on. Need to take a look at my gold portfolio. That seems to be where the volatility is on the day Tuesday. Everything else, for the most part, kind of a quiet day overall. But man, just to scan over at that metals complex, really some big downward moves there on Tuesday.
Yeah, that's where a lot of the energy in the market has been focused lately is the metals for one reason or another. I think there's been a lot of talk about de-dollarization, big picture concerns about, government shutdown, how the administration is handling certain things. We've seen a lot of central banks around the world buy gold and silver. We've seen a lot of sovereign entities, Saudi Arabia, for example, adding gold and silver to, their bigger picture sovereign positions. And then I think there's been a lot of, kind of late money chasing the metals here as of last week. So we're getting a really big correction. When you think about silver, for example, we saw a new record high last week. We had a new record high yesterday in gold. And the last run in silver started about mid-August. And so today's low retraced about 38% of that move. If it wanted to retrace half of it, that'd be about another $2 below today's low. So, obviously we are seeing a profit-taking event, but I think there's still a bigger picture belief by a lot of participants that silver, potentially has a repricing event in front of it. And, I think there's a lot of looking at where gold is, and gold, even with today's large pullback, is still more than double the price of the 2011 highs. And now silver, with today's correction, is back below those 2011 record highs. And the ratio of gold to silver is very out of whack compared to where it's spent some time previously. So we'll see. But as of right now, yeah, that's where the big volatility is in the metal markets.
Well, big volatility in metals, but it doesn't mean there's nothing going on in the grain and livestock trade. There are some things that we can take a look at and talk about. And, why don't we start our discussion in the livestock complex, Brian, and cattle? All of this talk about the administration's plans to lower beef prices. Secretary Rollins on CNBC Tuesday morning said we could expect sometime this week a big plan that's going to be rolled out here. There's already been talk about Argentine beef imports and more. There's so much going on. There's a lot of pushback from ranchers and cattle groups in the U.S. But as you look at cattle from a market perspective, what are some things that we need to be keeping our eyes on here across live and feeder cattle markets right now, Brian?
Well, number one, yes. We have a very strong market, and it's going to be susceptible to headlines and talk. When I think about the ongoing pattern in cattle, and this is true for both live cattle and feeder cattle, we seem to have this kind of quarterly pattern. And it started back in the second quarter of this year, where they would buy the first 2 months of the quarter. We kind of consolidate for that last month of the quarter and then resume the bull run at the beginning of the next quarter. We did that in the third quarter. And then we started that here in the third quarter. And one of the things that we saw along the way in that second quarter rally is we kind of extended the initial run, and then we started to see quite a bit of volatility. And there was some week to week, some late week limit down or close to limit down moves in the feeder cattle market. And the way that the market behaved is we did see a low made, the next day after that limit move, and then a resumption of buying, and that happened twice. So what I think is really important right now for cattle is how this October live cattle contract behaves. It's going into expiration here next Friday. Today's highs were actually within striking distance of the contract high made last week, even though we had that large amount of selling last week. And if the cash is truly what is the important part of this market, regardless of what is announced or what plan might be coming ahead, should we start to see this October cattle contract make new contract highs, number one, and number two, push through the highs that we had back in August when the August contract was expiring, I think that really tells us that the underlying story, the underlying strength of the market has not changed. Now, everybody's going to have their opinion on what the government decides to do or doesn't decide to do. It makes sense that everybody's kind of pointing their finger towards Argentina being a possibility, and that's who the administration's been talking to recently, so it makes sense to speculate that. But I think in general, most people watching this will agree that they really don't want to see continued interference from the administration in markets. The markets have a job to do, and they're good at really accomplishing that job on their own. And when you start to do things that interfere with the market and create distortions, it's really not good for the big picture. And the concern from the cattle rancher right now, and if you're sitting here paying $5 a pound for calves, and the live cattle board and the deferred contracts and all of a sudden can't rally because of government interference, that really changes your whole marketing plan for what you're spending money on currently.
And that is an excellent point. It's market manipulation in many ways. I'll say it. And it's something that it really, to your point, creates a lot of headaches and concerns and fear, I would say, when it comes to your marketing plan. If you've been, try to do things at these price levels and then the government steps in here to do whatever they're going to do, it creates chaos into a market when, everything I understand, the market's job is supposed to be, building off supply and demand, and the market does what the market is supposed to do. And so to your point, I think whatever happens here, this is going to create some significant challenges for a rancher when it comes to their marketing plan.
It really does. And the problem with cattle, among many things, but you think about when the market trades and when news comes out, and we don't have to think very far back. Let's just go back to the trade that we saw recently. The market closes and it closes at 105, and then devastating news can come out while the market is closed. And then the open at 8:30 the next day is a severe reprice from the previous day's settlement. You don't have a chance in the meantime to do anything about that news that occurred while the market's closed. Now, I'm not an advocate for live cattle trading overnight. We saw what happened when you get live cattle to trade during night hours, and small orders push the market around extensively. There's just not enough liquidity there. But again, that's really where LRP comes into place, where you can use that as a product to help establish floors. But man, if we start to really see some news that really changes the fund's mindset on whether they want to be in the market from the long side, it's going to be a problem on how the market reacts to that, and what the producer can effectively do when you're opening several dollars lower on the way to a limit move.
Yeah, a great point. Real quick on the hogs before we switch over to the grains, are cattle supporting this hog complex right now? Fair amount of green there on Tuesday, or are hogs kind of off just doing their own thing and trading their own fundamentals right now, Brian?
I tend to think they're trading a little bit of their own fundamentals. The hog market broke off of their own highs well before the cattle market showed signs of distress. I do think the hog market showed some signs today of potentially making a good short-term low. We have corrected off the highs quite a bit. And again, considering the big picture of different protein sources and the cost of protein, again, I do think it'll make the hog market look attractive on some of these major pullbacks, especially if the cattle market is still relatively close to highs. We did see a good turnaround off of the lows scored here earlier this week, and it was a good close overall for the hog market. So I do think we're probably going to see some continued buying here, and we do have some upside potential in that market, at least in the short term.
We're having a conversation today with Brian Splitt from agmarket.net here on Market Talk. Let's go over to the grains and oilseeds, Brian. Let's start with corn. Yeah, kind of a quiet day again on Tuesday. Harvest is rolling along. We've been watching this market. I felt like it's been drifting in the futures side here, just with no real fresh news to trade off of in corn. But your thoughts on this when you take a look at these contracts and you look at the charts and more, especially Dees corn right now, what stands out to you? Are we sitting on some good support? Do we need to be concerned if we slip through a certain level? What are you seeing right now in corn?
All right, so I'll address a few things about corn. Number one, I think the fact that we're still sitting here 30 cents off of lows scored in August, even though since then, we've had multiple millions of acres added to the balance sheet. We've seen the quarterly stock report show that the carry-in from last year's crop is over 200 million bushels more than what the USDA was projecting. We've dealt with some additional bearish things since then, and the market is still well off of lows. So I think that's supportive. We do still have the potential for a head and shoulder bottom pattern. In order to validate that, we have to get December through the 430 area. We have to get March through 450. Breaking through the potential neckline of the pattern is what is needed to validate the upside objective. So until we do that, and it's really got to stay in short order here, because if we just keep languishing here and going sideways for another several weeks, it really takes the symmetry out of that pattern. So I think right now, at the very least, we've got a market that is supported by demand. We seem to have established a low end of a range. Let's just call it around 410 in December. We seem to have an upper end of a trading range right now, just under 4.25. Previously, 430 was strong resistance, and I think an element of that is with just basis in general that gives producers $4 cash. Some will be above, some will be below, but kind of as a whole, as an average. One thing we've seen is that the spreads have tightened up. So December to March, the carry has eroded a little bit. Basis has improved. So now with a little bit better basis, I think 4.25, just under 4.25 can give a producer $4 cash by and large. And I think that's kind of what's governing the short-term market here is, the user wants to buy it near 4. The producer is going to take some $4 cash on some of these short-term sales, but that's going to dry up here at some point. And then what's in the bin is going to be in the bin unless there's a reason to move it. And for the time being, that's not going to be unless we see higher values. So if the futures market is not going to rally, then I think we continue to see some of the spreads tighten up. I think that's another incredible thing is, again, compared to last year, December to March, corn didn't build as much carry as it did last year. And that was with pricing in a yield at 188.8. That was with seeing those 4 million acres. That was with the additional carry-in from last year. And now we're just as tight at this time of year on this calendar day on Dees to March as we were a year ago. And that was on the way to that spread continuing to narrowing into delivery. So sometimes if the futures market isn't going to do the heavy lifting, the market has to do other things. And that would, again, be on the cash side, basis firming up. And the market taking carry out of the market to say, we're not going to pay you to keep it in your bin. We're going to want that now. When that happens, the producer has to realize, well, all right, what's the opportunity in that? And that is, well, now that there's less carry in the market, if I want to go ahead and buy a call to re-own bushels that I'm selling, now there's less carry. There's very low volatility in the options right now. So it's very cheap to sell corn and replace it on paper if you still want to have participation to the upside. And we'll talk about beans here, but it's a little bit of a different story there.
Well, it is a different story there. One quick thing I do want to ask you about corn, though, and you mentioned this to me earlier before we went on the air. Talk of trade tension with the U.S. and Colombia now. Colombia is one of our biggest corn export partners. Are you worried about that having an impact here on a corn market that is sitting on plentiful supplies here with this harvest season, Brian?
It's one of those things where I think, again, it's a negative headline. This has to do with, our administration's efforts regarding narco terrorism.
Yeah.
And, this is the pushback. And it's one of the things here where, unfortunately, food's leverage. And it's a very easy thing to say, hey, we're going to make it difficult for you to buy basic things that you need, and use that as a leverage mechanism in negotiating. So unfortunately, that affects the producer and potential values for their crop. But I do think it's going to just be one of those things where Colombia will still need the corn. They're still going to be buying the corn. Do they pass it through somewhere else? The world demand is what the world demand is. And so, does it really change the world balance sheet? No. Again, will it have some potential impacts on basis? I mean, it's the same kind of argument for the soybean producer in North Dakota, right? You take away the China buyer, they're the ones that are the most affected by it because their soybeans get railed west to the PNW, and then that's how it leaves the country. Without that market, their basis suffers dramatically. So you're going to have an impact on some localized areas that will typically feed that pipeline into the export channel. But again, the world balance sheet is not going to be affected by that big picture. So I don't know. We're just kind of getting sick of picking spats with with trade partners in general, right?
Yeah.
The message has been, let's make the farmer in a prosperous situation, the golden age of agriculture, and we move in positive steps in one direction, but then over here we're going backwards over here. So I know it's all in the effort of big picture things that the administration wants to do, but again, unfortunately, our sector bears the brunt of a lot of these negotiation tactics.
No, that's a wise point. Let's talk a little bit more about soybeans before we close out today. And you mentioned some different things to watch here, different dynamics. We look at these charts. Beans, of course, a lot of the talk has been centered around the U.S. and China negotiations, et cetera, et cetera. I have seen river basis improve a little bit. There's a few nuggets here, I feel like, in the soy complex. What are you tracking there right now, Brian?
Yeah, you've seen some basis improvement in soybeans as well. So again, that can be better in some areas than others. But I would say by and large, basis has improved over the last several weeks. And right now, when we look at the flat price mechanism of the market, I would have to mention that the November contract did basically get right to the downtrend from the August high to the September high. So here we are in October. That is the month-to-month downtrend. We did not get through it, so we did pull back and see some profit taking. Where we closed relative to our open, that type of bar shows a little bit of concern. I would say that if we do start to push through today's lows, we are likely to again kind of work our way back down to the low end of the range. And if we really think about it, most of these 20 to 30 cent moves in soybeans as of late have been based on short-term sentiment change, based on words out of President Trump's mouth, either directly to press and interviews or through social media. And so today, the commentary was a little bit more on the negative side of the upcoming meeting with President Xi Jinping. That's supposed to happen on October 31st. And so again, if we got to the downtrend and now we're starting to see some negative chatter, it just seems to be how this market's been trading, that we'll kind of see that little pullback down to the low end of the range. And then maybe we'll have some positive sentiment early next week to bring it off those lows again. I will mention that November options do expire on Friday. And that's going to be another interesting element to the soybean market, because a lot of times after a major option expiration series happens, then you have a large move the following week, right? There's a lot of coverage for both longs and shorts that goes away when those options expire. And if there's not something that's established to then take over that position. So for example, if you have a put under November soybeans, and maybe that puts at 1030, and on Friday, we're still kind of meandering around here and we're at 1032, well, that put goes away. The appropriate thing to do is say, okay, well, now January's got some carry from November. It's almost 20 cents. we should reestablish something and take advantage of the carry. Or we'll go out to March that's got a little even more carry and reestablish a floor there and use the carry to your advantage. So when these options go away, if there's not another continuation of that, then a lot of times that'll lead to a large move in one direction or the other. So there's kind of going to be, a naked position, if you will, once these options expire come Friday.
Great thoughts and analysis and perspective as always. Anything final you would share or reiterate for folks here on the show today, Brian?
Yeah, it's just a trying time right now. I think you just have to continue to focus on kind of what your short-term priorities right now are and where the short-term opportunities will likely lie. And I think primarily that's going to be really keeping a very close eye on your basis. Whenever you see some good short-term basis pushes, I think you have to take advantage of that. I think you have to set yourself up to look for some basis opportunity here, especially in early December. That's going to be a real sweet spot for corn basis seasonally. And so if you can get yourself lined up to maybe deliver some corn in that time frame, that might be something to look at. But again, there's carry in the market, and especially in the soybeans, it's telling you to store it. But the only way to capture that carry is then to go out and make a sale in that deferred contract or lay off a hedge in that deferred contract to put a floor in to protect that carry. Otherwise, that carry does you no good.
Well, I know folks can reach out for more. Agmarket.net's the best way to get started, and reach out to folks like Brian, and they have a great team there at agmarket.net. With that, we will let you go here on Market Talk today. As always, Brian, thanks for joining us on the show. Have a great week. We'll talk to you again real soon.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.